Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from Colorado. Rick, welcome back to the show.
Thanks for inviting me on, Jim. Always a pleasure.
The Dow just can't seem to stop climbing. Is this thing going to run out of helium anytime soon and come back down to earth?
I promise you it will, and it's never been any different in any bull market. You get to the giddy heights of a bull market, and there'll be so many stories out there about why it's different this time, and the source of funds that's pushing stocks higher seems to be inexhaustible. And, you might say that of the essentially free money that has come from the trees that has been available to companies to buy back their own shares. And this has been a $1 trillion plus factor in the bull market. Companies have been routinely buying their shares for the last 15 years. And, of course, there's no net economic gain to having a company buy its shares, but the perpetual motion machine part of it is that as long as they're shrinking the float, that essentially artificially drives up the earnings per share. And, of course, that gives all the fund managers reason to buy the stock. And when the stock gets to certain targets, the corporate executives themselves who have taken this free money to buy back their own shares have stock options to exercise. So that really does sound like a perpetual motion machine, but it was always thus at the top of bull markets. You look at it and you think, how could this possibly end? I promise you it will.
Is there any talk about limiting the amount of shares executives can own because they can so easily manipulate the prices?
Well, I think the corruption really goes much deeper than that, and to get at the problem, you would simply have to change the tax rules, and you would have to. I don't think it's going to happen from a political standpoint, because you wind up essentially telling, for one, a lot of these Silicon Valley companies, hey, you can no longer incentivize hiring or whatever with stock options. But of course, the incentives are kind of absurd, and no matter how capable an executive, it's always going to be debatable. And here I come down on the same side as the socialists. It's always going to be debatable whether you need $100 or $200 million stock bonuses to lure talent. I think I remember Grasso, the head of the NYSE, having a golden parachute that gave him several $100 million when he cashed out. And I'm thinking, I was a headhunter for a while, I'm thinking I could have found recruited someone to run the NYSE and done it for a lot less than a $300 million paycheck and bonus. So things have really gotten out of hand. There's nobody minding the store. There was a point back in the 50s, I guess, when shareholders were activists. There's a great funny film called The Solid Gold Cadillac with Judy Holliday, where she plays the role of corporate gadfly. But we don't have any gadflies anymore. We've got essentially a bunch of satisfied institutional buyers. They like it when they see stocks go up, and they are certainly not the agent of individual shareholders or individual investors. They're not. There's no constituency to reduce these outlandish payoffs that corporate executives are getting just for essentially watching their share prices go higher on the flow of funny money into the markets.
Well, statistics in Canada show top company executives make as much as their average employee by 11 o'clock the first day back to work in the new year.
That's one way. That's a good way to put it. It's absurd. And, but again, nobody's minding the store. It's like, hey, we're all making money. The markets are rising. Who cares what we're paying these guys? But ultimately it is it stinks to high heaven. It's really, endemic corruption of the system. And when you figure that all these guys, not only the corporate executives, but the fund managers are getting rich simply because the central bank is pumping money into the markets, it's all pretty sick and pretty sad, and it's predictable that it will come to no good end.
What's your opinion of Trump getting rid of the fiduciary duty regulation for banks that Obama had put in?
I think that I'm almost an anarchist in that respect. I say no regulations would be best. Do away with all regulatory agencies, and just I'm kind of a Wild West advocate, because when you look at the due diligence notes that companies put out in their prospectuses and this and that, it gets so ridiculous. Nobody wants to read it all. Only the lawyers who put it together understand it. And I think if we did away with the regulation, you would get a business springing up of people who provide the information that investors need to make good decisions. And if everyone had to do due diligence instead of depending on an increasingly voluminous set of rules to govern, to keep the bad guys honest, the bad guys would have to kowtow to the markets. They would have to become honest because they're being scrutinized. And of course, that the scrutiny of regulators has never amounted to much. They're so busy putting people like Martha Stewart in jail that they don't even address the really corrupt to the core, the systemic corruption of our whole financial sector.
Well, perhaps then instead of asking your bank to invest your money for you in a certain product, why not just invest in the bank and let them run loose?
Yeah, that's true. I mean, eventually the good guys and the bad guys will get sorted out, and I honestly don't think we need regulators to do that. The only place where I do think we need regulators, in the sense of we just need them sniffing around, would be in the environmental sphere, because companies, if they're not watched, will tend to pollute. But companies will also lie, cheat, and steal. But we don't need regulators to find them out. And there are really too many rules. We could do away with them all, and it would serve the interests. It would encourage people to do due diligence, if not by themselves, with the help of paid experts.
Well, when these financial institutions are caught doing something wrong, the fines that they get may sound impressive because they're in the billions of dollars, but in actuality, they only account for 2 or 3 days worth of profit.
Yeah, that's generally the case, and it's like, where does that money go? Essentially, the regulatory agencies collect these fines, and that really is a perpetual motion machine. They just grow fatter on the fines that they levy, and they regulate more and more and more. I had a case of my own. A company, a big marketing company in Baltimore, was marketing a product that I put out years ago, and some of the promotions were pretty aggressive, and the Commodity Futures Trading Commission and CFTC called us in, and they went over the promotion line by line. And when I left the hearing with the attorney that the company had provided to me, he said, never in the years that I've been going in front of these guys have they ever said, well, you've satisfied the case, we've satisfied our questions, you've answered every question we asked you, and we're going to just close the file. The attorney said they never close the file, and they have the ability to pull any file they want just to make work. So as many new attorneys as they hire at these regulatory agencies, they have the ability to create unlimited work for however many people are on staff. So they never close the file. They can always just sort of drum up work for themselves, and that's what they do.
Taking a look at how high the stock markets are in both Canada and the U.S., people are saying the election of Donald Trump is the reason for this enthusiasm for stocks, but can the prices justify that enthusiasm?
Well, there's, I think, reason to be enthusiastic about Trump in terms of his deregulating the business environment and altering the tax code in ways that might help small business, which is really the growth engine of jobs and of the U.S. economy. That's we definitely need some deregulation help there. But it's not so much. You wonder, well, how much higher can the market go just on mere optimism? And I think it's already overshot its mark. Anything that Trump is going to do, as optimistic as you could be, it's still going to take time to play out, and even more time to become, let's say, a positive factor in the economy, assuming that it ultimately is positive. So the market's way ahead of Trump optimism, and it's really just, the fund managers all hanging together. They were looking for a new theme, and Trump was it. They're always in a buying mood. They always have other people's money to throw at stocks, and I don't think it would have mattered if Hillary had been elected. I think we would see the same rally.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Rick Ackerman. Rick, U.S. housing sales are at the highest they've been since 2007. Now, isn't that when the last recession hit?
Yeah, we've talked about this a few times, because if I had to make a case for why the Dow, currently trading 20,800, would probably be better priced at around 10,000, the housing sector would be a big piece of it. And it's been really obvious since late autumn that we were headed into a perfect storm for a housing bust. Number one, you had shrinking. There just aren't enough homes on the market for sale, so you've had a shrinking inventory that has gone in the face of a rise of, I think, 70, 80 basis points in 30-year fixed mortgages. So shrinking supply, rising prices, higher mortgages, that was absolutely going to produce it was going to bring the boom to a dead halt. But we've also seen some activity on the commercial side. All the private equity funds went all in with buying spec homes to rent, and we had certainly a mania in that area, but we've also had a mania in rental construction, so that the rental market is finally saturated. Rents are coming down even in places like San Francisco, so that's another bubble that is in the process. It's just in the very beginning of a bust. It has been popped. And you've got whatever is going to happen with the REITs, the commercial operators who have malls that are essentially closing or becoming less profitable. We're going to have huge shrinkage in that area of real estate. So, and the office space mania has really that's gone beyond anything we might have imagined a few years ago. So we've got really an absolutely certain bust shaping up in real estate, and here is the Dow Industrials. They're trading at record highs, and something doesn't look right here.
Were you one of the people who said because shopping malls are losing their anchor stores because more people are shopping online, perhaps it's time to start redesigning these malls into things like seniors housing, where they'd have, medical facilities there and local shopping and so on for them?
I think that's gonna happen. All of the malls can't be tear downs. I've seen in Colorado conversions that did substitute residential for commercial. So they've got property, they've got in some cases steel or concrete infrastructure, and the malls will slowly have to evolve into I guess little cities. One thing that you can see going on though, it's really just kind of a last ditch desperate gambit, is the malls. They obviously have too much parking. I mean, every mall that's built specifies almost exactly how many parking spaces there can be per store. Each store generating X amount of traffic per square foot. So the parking lots are pretty well calculated, and it turns out with the malls slowly withering away, there's too much parking space. So the operators are trying to cut deals that would allow them to build businesses into the parking lots that are somewhat away from the let's say the conceptual framework of the malls themselves, and we've seen it here in the Boulder, in the Flatirons Mall that's near me. There are a few restaurants that have gone up, Tokyo Joe's, and there's I think a smash burger, a hamburger place, and these are they're really just small extensions that are being built into the parking lots just to generate some revenues. But of course, they're also competing with the food businesses and some of the other businesses inside the malls.
Also, too, because malls have a big flat roof and big flat parking lots surrounding them, they're really natural places to put in solar developments.
Yeah. Although, the obvious thing would be for them to generate malls to be generating their own power. Some have actually gone that route, but it's questionable whether you could use the mall space to generate any. The sightings of these malls, the places where they are actually located, the properties are too valuable to turn them into fields of solar panels and windmills.
Although there is new technology where you can put some kind of a paint coating down that has copper wire in it that generates power from all those parking spaces that are sitting there empty.
Right, I've seen that. We're getting more and more into, you see these, they look like space-age gas pumps, but they're actually electrical outlets. Boulder has plenty of those. Boulder is your very self-consciously green town, so everywhere you go, there's places where you can plug in your Tesla.
But of course, in Colorado, oil is still king, isn't it?
Well, after the bust of the late 1980s, Colorado decided it wanted to be less king in the energy patch, and I think probably the main concern in the energy sector here is home rule where fracking is concerned. A lot of small towns have said, hey, no fracking, particularly east of where I live, where you head out from the foothills into the Great Plains, east of Boulder, east of Denver. These little towns, some of them want the fracking revenues, but there's always a base of opposition in each town that says, hey, no way. So far the court decisions have basically said, look, you little towns are going to have to roll over because there's not really great evidence that fracking is harmful. So that is still unsettled science, but all the controversies that we're going to see throughout the U.S., wherever properties are frackable, are playing out in Colorado right now.
Well, fracking does cause small earthquakes. That has been proven. Take a look at Oklahoma. They never used to have earthquakes. Now they have one every day.
Yeah, that's kind of scary. There's no question that when you screw around, you deplete the water table and you change the geothermal pressure and you do this and that. If you're essentially hitting rocks well beneath the surface with high-powered streams of water and eroding some of the substrata that, as you say, it's causing, in some cases, earthquakes.
Well, I wonder why geothermal isn't more developed here on the West Coast along the Cascade Mountains, because there's either an active volcano or an extinct volcano every 25 miles.
Well, I think it's partly the cheapness of natural gas that has done that. You know, if you're exploiting geothermal energy, you have to figure out how to, you're essentially getting heat energy and to transport that so that it's usable somewhere else has its costs. So for right now, the infrastructure for transporting natural gas as a source of power is lower.
Rick, anything else you wanted to add to what we should be watching right now?
Well, just to put this out there, I think this Trump rally has gotten way ahead of anything we could be optimistic about. So I'm very, very wary of stocks being at this level.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from Colorado. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.